Welcome to Buy, Hold, Sell. I'm Matthew Kidman, and today we're talking real big caps. With me is Romano Sala Tenna from Katana Asset Management and Simon Bonouvrie from Cadence. Welcome, gentlemen. First stock has been a terrific performer, Romano, for a few years. It's come off a bit lately. Good yield still. Telstra, buy, hold or sell?
Yeah, look, I think the yield just holds us in there as a hold there. You know, the mobile application data is great for them, but the competition is coming. The balance sheet's still not pristine, it's far from it. And there's some things happening in the US that we don't fully understand, technologically wise, and so we're just watching and trying to understand better the impact for that on Telstra. So for us it's a hold, but we're not wedded to it.
Okay, a hold. Simon, yield good enough? A hold, yeah, buy or sell?
Yeah, Telstra, look, I think it's purely a yield play. It's going to offer you a low growth, low single digit growth. The mobile division is the thing you want to own. However, they've got other businesses within the larger structure.
Hold for you as well?
It's hold.
Okay, let's go to the big Australian, BHP. Been under pressure for a couple of years now. Commodity prices down.
Yep.
Buy, hold or sell?
For me, it's a sell. The stock's on 25 to 30 times, depending on where your commodity price forecasts are at. It's leveraged to iron ore, coal, oil. All three of those commodities are under pressure. Share trends down, sell.
You a bit more bullish?
No, we've been out of it since March 14 and we're still staying out. So if you're not in there, I certainly wouldn't be buying. If you're in at these levels, you probably have to hold given the valuation. But we're getting a bit excited. I just want to see the commodity complex come back a little bit more and stabilise, and then it'll be a buy for us. But at the moment, we'd sort of rate as a hold sell.
Are you a bit more bullish on Woodside, oil and gas play?
Yes and no. I mean, if you look at what's happened since OPEC shenanigans in late 2014, Woodside's back about 10%, Santos down 40%. So from our end, if you want to be in the oil and gas space, I mean, notwithstanding Woodside's got a better balance sheet, we think a lot of people, a lot of retail investors in Woodside for the yield, we think that they have underestimated how much the yield will decline in the coming 12 months. And I think there could be a substantial price decline to come. So I wouldn't be in Woodside, and if you can stomach the perceived risk of Santos, I'd be in Santos instead.
Simon, from your previous comments, sounds like a sell.
Yes, I'd sell it. It is a yield stock at the moment and it's exposed to oil. If I had to favour one commodity out of iron ore, coal and oil, I'd choose oil. However, their earnings will decline significantly this year as the oil prices come down. I think it's a sell.
And let's go now to the biggest sector in Australia, the banking sector. NAB has had fixed up its poor UK assets, it looks like, but there are capital raisings still floating around the sector. What do you think, buy, hold or sell NAB?
I would buy it. I think all the big four banks are a buy. They've been sold off significantly over the last few months on capital raising concerns. You saw today Westpac is selling some of their BT stake to raise capital. NAB have raised predominantly most of their capital. I think the capital requirements coming up, and we'll soon get an indication from APRA, I think there'll be a lot less than what some of the sell side analysts are speculating on. These stocks are on 6% fully franked dividend yields with mid-single digit growth. I think they're a buy.
You're that bullish, Romano?
Look, I concur. I think your starting point has to be what's going to happen with the interest rates. I think we're still got at least one rate cut ahead of us. If not, certainly it's not going to increase for a while. On a comparative basis, when the dust settles, your SMSF farm and retail investors, they're going to go back into the banks, and I think NAB's probably the pick of them. You may also get some special dividends in the coming years as they repatriate capital back from the UK.
So buy as well?
Buy from me.
Okay, let's go off to offshore earnings and a bit sexier, the Bionic Ear, Cochlear.
Yeah, look, I think you never want to buy a company when you've got a CEO in transition, but I think it's been well managed, especially, you know, Dr. Roberts has been there 11 years, he's well regarded. I think they've managed that process well. The evidence from the competitors and over and so forth indicates that they've probably stabilised their sales, but the yield's a bit skinny for our liking, the PR's a bit high, and technically it's starting to roll over. So for me, it's a sell.
Simon, you a bit more bullish on Cochlear?
For me, it's probably a hold. It's a hold. The main reason to own is to get exposure to offshore earnings. There are other stocks in the space that you can own instead. However, they are having a CEO transition, and normally that's a sign just to sit on the sidelines to see how things play out. They do have a highly regarded chairman, which I have a lot of respect for, so I'm sure he's managed the process well. To me, there's also a bit of earnings risk there, so probably a hold.
There you go. There's not much to offer at the big end of the market, but you might want to dust your NAB folder off and have a look.